The Fed, forget what they're going to do. If you just think they're going to confuse people, then you would say volatility can go to the top end of the risk range, which is at 1743. And by the way, if it breaks out above that, there's no resistance really to 2123 in the VIX. So have yourself a little party with that type of a setup. Not for me personally. That's why we're raising cash and taking down gross exposure across positions, both long and short, because I have no idea what the Federal Reserve is going to do. What you will notice also from a volume perspective, I spent probably a little bit more time than I usually do talking about that crazy thing called volatility. But if you look at the volume of the water, and again, if you're just looking at the surface, how deep is it, sir? Do you know? Do you have any idea what the interconnected risks or nonlinear risks embedded underneath that water level are? Measure the volume. Measure the volume. Volume yesterday, total U.S. equity market volume was up 5% versus the 1 month average. And again, we're including dark pools, so again, metaphorically fits with the whole body of water thing. But again, I don't think that it's unreasonable to think about risk like a body of water approaching a waterfall. By the time you get over the waterfall, newsflash, try it in Niagara. We Canadians have seen many try this with a barrel before. This does not end well, and at the point of entropy, that you go over the waterfall, I have not yet seen somebody come back. I'm waiting for that, so I do look forward to Mr. Williams and Janet Yellen telling me how they can centrally plan barrels, people going over barrels in Niagara to go back up. Again, levitate these people. This is what the Federal Reserve should be doing, banning economic gravity and gravity itself. I think that would be just fantastic to observe them articulate how they're going to do that, which sounds about as nonsensical as how they're going to smooth global economies, by the way.